Happy Saturday, everybody. Wall Street Jesus here. Saturday sweep series. Once a month, we're open to everybody here. So, welcome everybody. Those of you I know on Twitter, members of the Steam Room and private Twitter are here as well. So, good morning to everybody out there. And if you're new to the webinar, um, we do this every Saturday. We do it every Saturday for members of both the Steam Room and private Twitter. We get together, we go over the three most important things to set up the week, in my opinion, our opinion, and that's wise guys sweepers, retail sentiment, and strategy. The three S's: sweepers, sentiment, and strategy. And we look at these things on a day-to-day basis, intraday, in depth. But I find it very helpful to go back and look, over the past week and see how all those three things lined up, and how we could put a game plan going forward for the following week. So we get together every Saturday, and what we're going to start doing is once a month, we open it up to everybody I know on Twitter and so forth. So this way we could discuss, what we're seeing amongst us all here. Okay. Let me get it out of the way because I leave it to the end. Sometimes I forget it and I get questions. If you have any questions on what we discuss here, okay, as far as the sweeper activity, strategy, anything we discuss here, you'll find a lot of the information on the wallstreetjesus.com site. Okay. You go to the strategy section and there's several short blogs that you'll find very informative if you're interested in this stuff. Okay. As well, if you're interested in attending this webinar every Saturday, becoming a member, we offer first a 3-day trial, no credit card. Okay. You could come into the Steam Room and get an idea of what we're all about. Also, the webinar is open to private Twitter members, who are just exclusively private Twitter members. They get the private Twitter feed and the Saturday webinar, $59.99 a month. You go to products and you can hit that tab there. Okay, and one question I get a lot, I sound like a broken record because I continue to get the question. Steam Room members, if you sign up for the premium package, you get private Twitter included. There's no additional cost. It's included in the premium membership. All right. So you got a 3-day trial there, and then it's 50% off the first month, and you got premium access to everything we have to offer. Okay. So let's get rolling here. Okay. And as I said, sweeper sentiment strategy. Let's start off with what we're seeing as far as the flow is concerned, sweeper activity. Okay. And what I like to do on these Saturday webinars is go back basically and kind of like start off what we were looking at in the prior webinar last Saturday. Okay. And then, gradually we fast forward and go into what we're seeing now and see how it lines up. All right. And a lot of you remember, at both these lows, we're talking about back in February and back here in early April, sentiment was lined up nicely. It was a beautiful thing. We had not only some of the shorter term sentiment indicators we look at, option indicators we look at, okay, because I think I'm at the point now, I've been in the game long enough that I don't forget, but a lot of traders have a tendency to forget they're traders. If you're investing, it's one thing, but if you're an active trader, you got to understand you should be looking at only things that apply to you as an active trader. Okay, there's a lot of stuff out there. There's a lot of noise out there on a day-to-day basis that really doesn't mean jack poop to you if you're an active trader. Okay, you hear things like the yield curve and tariffs and all that stuff, and these are things that may play out in the future, but right now, and that's what as traders, we come in and we look at what, our signals and our setups are telling us currently. A lot of that stuff, most of that stuff is just noise. Okay. And you see it on social media. Okay. A lot of widely followed people out there, they're popular follows. Okay. But a lot of them are investors, longer term trend traders. And that stuff in that rule book is completely useless to you if you're trading options actively. Okay. If you're an active swing trader, meaning you're looking to get in a position, get in, get out, a couple of days later, if you get the pop you're looking for. So all that stuff you shouldn't, you hear me, I'm a big proponent of the first thing you should do before you start pushing buttons in this game is realize what you're all about. What style of trader you are or you're looking to be. What are the things you should be focused on? What you need to do to make money, as far as risk management and stuff like that. You can't just come into this game and, fly on a whim because you're just destined to fail. You're spinning your wheels. It may be fun at first, but you're not going to find much success or consistency that way. Okay. So when I talk to you guys, when I speak to you guys on these webinars, I just want to make it clear. I'm speaking as an active trader. Most of you are active traders. Everybody who's in the Steam room is an active trader. Okay. If you're not, then you should be paying attention to some of the more intermediate trends and signals out there. Okay. And we'll talk about that a little bit, rather than the active stuff. All right. And the reason I went rambling on about that, at both these lows here, even more so at this low, we saw a lot of the sentiment stuff we look at line up on both the short term and the intermediate term. Okay. Meaning the indicators were signaling to us that there was a high probability squeeze over the short term, and players out there were positioned at a bearish extreme, even over the intermediate term. Okay, we'll go over some of those signals, but both lined up beautifully into both these lows here. Okay, and then we look for the flow and the sweeper activity basically to guide us on the timing. Okay, and let me elaborate on that a little bit. What we're looking for once sentiment lines up, okay, because bearish sentiment can remain bearish for a little bit of time. Just because something signals bearish extreme doesn't mean boom, right there and then, a turnaround is going to happen. We're looking for the flow to guide us as far as when the smart money may be looking for that squeeze. Okay. So simple English, we're looking for some aggressive activity, aggressive buying to come in. And we've had, both setups line up nice. This first one in February, in my opinion, had more aggressive activity overall. Okay. A lot of tech names, just a lot of quality and a broad range of names out there looking for the squeeze. Where this most recent low, it's been a lot more selective. And maybe what we're starting to see is that rotation that we've been finally, we've been talking about, I think, since late last year. Okay, so what happens is you get the market low, you get sentiment line up, okay, you get flow start to perk up. They hit everything out there looking for a squeeze, and then they start to gravitate to certain sectors and selective names. Okay, for example, energy has been scorching, right? The energy group has been unconscious. I mean, almost too hot for my liking, because they all pretty much got away from you after that, initial action and initial setup there. So that has been a different look off this major low. Okay, it hasn't been the high beta stuff that and the tech names and the semi names that have been getting and seeing the quality action. All right. So anyway, the sweet spot as a short-term trader for me, okay, if you're a swing trader, the playbook here in this type of environment, and we spoke about this many times throughout several webinars, even in the past, going back, 2 years or as long as we've been doing it. The playbook in this type of environment that we're in, this is not 2017. Okay, it's a different ball game right now. The playbook is you look to buy weakness when sentiment is on your side, in your favor. Okay, and you try to get a gauge out of the flow of where the hot money may be going. Okay, and we talked about this. Well, we were talking about this amongst Steam Room members the last couple of weeks. If you're looking to play that trade, okay, off that sweet spot, sometimes you're better off just making a play on the overall market. Okay, or you may have a high beta name that you have in mind that you think can outperform the overall market if we squeeze. So it's more of a preference thing when you're in this type of environment and everything is correlated. Everything goes up and down together. Okay, we're starting to see signs of that possibly changing, but mostly throughout this correction, that's been the case. All right, so we had a nice setup here, and this rally, even though it didn't look like much, and every time you had a pop, they sold the close and then went up the next day, sold the close. You had maybe one down day. If I remember correctly, it was 7 out of 8 or 8 out of 9 up days. And before you know it, you had a nice squeeze on your hands. Okay. And what happens when you get that bearish sentiment, right? Everybody here that was loaded up in protection, scared shitless, excuse my French, okay, or betting on further downside, every troll on Twitter, basically, when I was showing some extreme bearish sentiment things I was looking at, was telling me this time is different and this market is going to fall apart. Okay, what happens is when you get this type of lift, it unwinds. Okay, and not only that, you got even smart money out there, okay, that are concerned about, I don't know, us bombing Syria or Trump firing Mueller or any tariffs, China tariffs, whatever the reason may be. What happens is everybody puts on protection, especially the big boys out there that need to protect long funds and big long portfolios. And then when nothing materializes, they have to unwind that. Okay, and that all plays into these squeezes. Okay, so you go into the weekend. Oh, we're going to bomb Syria. We're going to go to a nuclear world war with Russia, right? Everyone's concerned about the worst case scenario. They're protecting for that. We bomb Syria. We hit a couple targets. We make up with Russia, or whatever the case may be. No retaliation. Monday, the market opens up. What's going to happen? People unwind what they overdid on the protection side. Okay, and that's why you see that. That's why you see that a lot off these sentiment indicators. Okay, it's not magic. All right, that's what happens. That's what plays into these lifts, these squeezes. Okay, and as we continue to push higher like we did over the past 2 weeks, that extreme bearish sentiment, what's the word I'm looking for? Alleviates. You know what I mean? They're not that bearish anymore. All of a sudden, you turn on CNBC and some of the other noise out there, okay? Or you could just go on Twitter, and Twitter is a great indicator. People all of a sudden are talking about new highs again. I started to see, NVIDIA, new highs and all these hot names again, new highs. Like, all that bearishness went out the window completely. All right, and then what we see on the indicator end, the sentiment stuff that we look at, everything that was giving us those green signals, now what do? They start to push, to neutral at the least. Some of the shorter term indicators go above neutral. The Squeezeometer, which a lot of you guys know, especially if you're members, that's a measure of retail option sentiment over the extreme short term, that sometimes you'll see these things get red hot. In other words, they go from extreme bearishness to extreme bullishness. Even, like I said, this may not look much to you, but even I've seen it even smaller moves than this, where sentiment can shift. Okay. And that's what creates, I think, the issue. Okay. Especially I found with myself over time. These setups, I've gotten myself to the point now, even for quite a while now in my career, where I'm ready. I'm ready to look for those entries. I'm fired up. Like even a lot of members were telling me, down here, I sounded, more bullish in the sense than I did all of January, where the market was just storming higher. Because to me, the likelihood of the market crashing lower and everybody positioned for that, the likelihood of that happening, in my eyes, is slim to none. Okay, where up here, when everybody's euphoric and everybody thinks the market can't go lower and they can't lose money, that's when I get that's where I get nervous. That's where you hear me say, we could push higher, but there's going to be a wash that wipes it all out. They're going to catch everybody and wipe it all out. Where here is the complete opposite. Nobody's long. So what happens is, if people realize it's not as bad as the noise was making it out to be, nobody owns anything. They have to get in, right? They have to get in. So that's what we were kind of seeing going into this week, and then things got a little too hot. Not everything, but some of the shorter term stuff got a little too hot. Okay, and I'll give you an idea of the stuff, and even if you're new to this, the stuff we look at. Okay, so this is some of my go-to stuff. Okay, this is the go-to stuff in the room and on private Twitter that we follow. We got the Squeezeometer. It moves intraday. We look at it, religiously throughout the day. It comes in handy for day trading, flip trading, looking to buy weakness and flip it into strength the next day or so. So it measures. It's a great indicator over the extreme short term. Okay. Right now, we are neutral. We were hot, and we had a chance of maybe flashing a green signal. At least a lot of us thought on Friday. It did not. Okay. So we're neutral there. Retail trader sentiment. This is another one that moves around a lot. It's for a measure of the short term. We're below neutral now. This actually flashed an extreme bullish sentiment just the other day. So we got too hot. So now we're below neutral thanks to this little pullback here. Okay. But again, neutral. So no signal there. The DSI, a lot of you guys may know it. A lot of professionals follow it. The Daily Sentiment Index. Okay. Well-known indicator. A lot of professionals I know follow it. Was flashing, green signals at the lows, both lows. We're basically right around neutral. I think we actually got over neutral and then dipped below it on Friday. All right. The NDSI, a lot of you guys know that we've been showing it a lot. That's the NASDAQ sentiment indicator. Okay. This is the raw data, the shorter term stuff that moves around a lot. Pretty much same thing we're seeing on the DSI. We're seeing it in the NDSI. A little more bearish on the NDSI. In other words, sentiment out there is a little more bearish on NASDAQ related stuff. The equity put the call, another popular one. I think everybody, if you're not a member, should have an idea of where this thing is at all times. We are neutral there. Okay, a little above neutral. Total put the call. I'm not the biggest fan of it. Measures everything, but I do look at it neutral. Degenerate ETF buying, the bearish ETF buying, that's one of my favorite indicators out there. It will only flash when things are at an extreme, when people are buying VXX, UVXY, the the bearish ETF inverse indicator, ETFs, all of them, you know them, right? Only the purest of degenerates are playing those. And, people who are really concerned and want some aggressive protection, right? So that's a great measure of fear, in my opinion. Tweeps, just I like to look at it. It's a social sentiment indicator, basically. And believe it or not, all right, believe it or not, and I was seeing it on Twitter, but I didn't want to believe it. Okay, they were bearish here, of course. We know that. They were at a bullish extreme here. Can you believe it? Like, I couldn't believe it. Tweeps. Okay, so now that's come in a little bit also with the last couple of days of weakness. All right, retail put buying, that's weekly retail put buying updates once every week on a Saturday. That's another indicator I love. Flashed green signals, as a lot of you members know, at both lows. Even as we got up here a little bit, going into, not last week, I think the following week was at a bearish extreme, which signaled we could have some more upside. We'll see where that is, going into next week. My guess is probably under a bullish signal, but we'll see. And here is basically the intermediate term stuff. Okay, this is for me, for my style, this is more of a backdrop. If you're a longer term player, these are things I think you should be looking at. Okay, the problem with these indicators, these three in particular that I look at, they don't signal enough. Okay, I'll give an example. This AIM, which a lot of you guys know, you could get it off Sentiment Trader, is flashing a bullish signal, and this thing only has flashed bullish signals basically at some major bottoms. Okay, otherwise there's no signal of it. All these little pullbacks in bull markets basically that you see, you'll never see a signal out of it. So, but this thing has been and still is in bullish territory. Okay, that's off this low and remains there. Okay, but this market could come back and test lows, and that has no effect on that indicator. It's more of a longer term read on sentiment. The intermediate NDSI, that's the NDSI chart with the red line that we look at a lot of times. I like to, get a measure of how they're positioned NASDAQ wise. That's still in bullish territory, but again, that signaled, bullish territory down here as well. And the other one is a Sentiment Trader, the smart money, dumb money. Again, a lot of people I know follow it. You had bullish signal there at the lows, starting to come out of that territory now a little bit. Some people interpret that as the smart money starting to take profit. I don't like to read too much into it because I don't pay attention to it as religiously as I do to these up here. Okay, so what basically this tells me is on a shorter term time horizon, okay, we're coming off a strong buy signal. We had a caution signal on some of these things recently, last week. And now, thanks to a couple of days of weakness, we're back in neutral land. Okay, so that's the sentiment end. All right, then we go and we look at the flow. Okay, a lot of times we look at the flow initially, but there's a lot of bulls in the air now, so we look at the flow. And what the flow's been showing us now, the flow's been really mixed. Okay, we just had April expiration, so a lot of the size out there that we were seeing, the size buyers, you look in open interest, there was a huge position of April calls already in open interest. Okay, so those expired Friday. So if a player is still bullish on a name, he wants and he's looking to replace those calls. So we saw a lot of that. Now, that's not aggressive, right? To me, that doesn't signal that bullishness that I want to see. He remains bullish, and he's replacing a bullish position. Okay. It's one of the things, especially in a volatile market, you see a lot on some big monthly expirations. Okay. Like, for example, we were seeing a ton of April buying. You know, anytime we were seeing buyers, sweeper activity or whatever the case, April. So April happened to be a big monthly expiration for wise guy activity, and a lot of that stuff needed to be replaced. Okay. So we were seeing a ton of that. So that's a neutral signal to me, right? It's not bullish. It's not bearish. Stays bullish. So it's more neutralish to me. Okay. And then now you throw in an added wrinkle here. We're in the heart of earnings season, for crying out loud. Right? And you guys know already, those of you who've been around me know how I feel about earnings, let alone earnings flow, for crying out loud. All right. So you throw that added wrinkle in. And now, you know, every time we see a buyer, last week, for example, any buying we see come in, the first thing I look for, all right, when's earnings? Okay, it catches earnings. Let me look in open interest. There's a big April position right there leading open interest. You know, so the flow is not clean. You hear me use that word clean a lot. Okay. In other words, sharp, right? That's what I mean when I say it's not clean. And when the stuff I look at, the signals I look at aren't clean, I'm unsure. That's when I get a little gun shy. You know, I like to be aggressive, and I'm most confident when I don't have a question about what I'm seeing. Right? When I see a sweeper and he comes in and fires a missile and then he hits another one and he hits another one, there's not a question in my mind that this guy is making an aggressive directional bet on this name. So I have confidence in stuff like that. When the sentiment signals out there, like at the lows, were all showing me the same thing, right? All showing me that the retail crowd out there is all lathered up in protection and betting on further downside. That's clean to me, right? There's no question about what's going on. You know, everybody's bearish. Heck, I feel bearish. How could you not feel bearish with the shit going on out there? But that's a great signal. Okay? Even more so when I feel bearish, when I feel it emotionally. Okay? So what I'm making the comparison to is now we've had a little pullback here, 2-day pullback off the run, but we're not seeing what I would like to be seeing. Okay? And there are reasons for it, right? Earnings, April expiration, maybe that'll clear up this week. It probably will clear up some at the least because April's out of the way. All right. So that's where, as far as the stuff I look at and Steam Room members look at on a day-to-day basis religiously, that's what we're seeing right now. Okay. So that doesn't mean we're bearish. Okay. But it doesn't mean we have to be aggressively bullish. Okay. It's more of be patient. And that's what I think, you know, a lot of traders need to realize this year. And God knows for how long from here. Okay. Coming off a year like we did last year, the numbers tell you, logic tells you that this market's going to be different, where you need to be patient and allow things to set up. Okay. If you're aggressively buying here near these lows, because sentiment lines up and you're seeing some decent wise guy sweeper activity on the call side come in. Okay. You cannot treat this here the same exact way. Okay. Maybe we get a drawdown Monday, a little bit more weakness Monday, and things change. Okay. But the point I'm trying to make is you have to allow things to set up. It's very similar to like these February lows, right? Same thing. I mean, it's almost, this was a larger rally in the sense, but I'll tell you, I remember it like it was yesterday. Okay. We had this panic, obviously got everybody fearful. Okay. And remember, we saw the Micron missiles, all that jazz come in nicely. We had a rally. And then, similar to what we're seeing here, we had this little pull. And it's not a coincidence that at these lows, right here, at these lows, that's where sentiment got bearish again. And then we had another push. Okay. So, and then, you fast forward, we had that whole other setup again. So it may be something similar to this here, maybe something similar to this here. So my point is, you don't want to jump the gun. You have reasons to be patient here, right? Earnings are a debacle. A debacle. Look at the banks. You had everybody and their mother bullish the banks, bullish numbers for good reason, right? Everybody knew the bank numbers should be good. It was well spoken about. You had a little bit of a pop and they sold them off like they were awful. Why do you want to be a part of that? You don't want to be part of that. You're not going to find any consistency trading in the middle of that. So that's kind of a depiction of where we're at now. You see Netflix blow out and everybody thinks, every stock's going to be like Netflix. For every Netflix, there's an LRCX, which was an animal all last year, semiconductor, that got hit over the head. Everybody saw the Netflix number. You had a rally in all those names, Apple, blah, 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 all the high beta stuff. Everybody thought they're going to run them into the quarter. They all got hit over the head late last week. So it pays to be patient and wait for the setup, okay? If you're developing, if you're in the room or you're on Twitter and you're looking to develop a strategy off the stuff we look at, flow and sentiment, it could be a deadly combo when used properly. You have to allow things to play out and let them set up. And you can't get concerned about missing a green day here and there. You can't let that bother you. You can't come into the day. I see this way too often. Okay. In my opinion, whether you're a day trader or a swing trader, see, a lot of people, when they hear I day trade, think I come in every day and I'm day trading 5, 6 different setups throughout the day. That couldn't be further from the truth. Friday, you know what I did Friday? All right. And Friday was a nice downtrending day. So if you buy puts and short, one of the few days where you could have got aggressive and made some decent money. All right. But Friday wasn't my day, right? Far from it. I mean, I scalped Winnebago, WGO, off some sneaky weekly activity in the morning. And that's all I did all day. I didn't even come close to pulling the trigger on anything for the remainder of the day. Because I'm waiting for a certain setup, right? I know what I'm good at. I know what I'm waiting for. And that's what I'm looking to play. And if you come into these markets thinking you have a remote control, oh, you know what? I'm going to get long here. And then right here at resistance, I'm going to buy puts and short that. And then I'm going to buy this low here because there's some support. Then I'm going to ride that up and short. Yeah. Okay. Good luck. Good luck. So, we talk about this a lot. If you think the short side is the place to make money in this market, okay, especially if you've been there and done that, who am I to tell you not to do it? You hear me say that to some of the newer traders out there. Don't even think about shorting. That's the best advice I could give you. Okay, but if you're experienced and you've been successful, okay, there are some windows to short. I'm not looking to take advantage of them, but there's some windows to get short. But you can't short into these lows. You can't short into these lows with bearish extreme and the flow turning on you bullish. That's where you got to be ready to pull the plug. Otherwise, you're going to get wiped out. You know what I mean? You're going to get wiped out. Like I said, Friday, even honestly, I would say Thursday, even though it wasn't that big of a down day, but Thursday, Friday, if you were somebody looking to play the downside, that was pretty much the spot. That was pretty much the spot. The flow started to look like crap. The sentiment indicators we look at, we're all above neutral, getting too hot. That was your window. All right, but the moral of the story here is, especially now, you got to get 2017 out of your mind. And this, more than not, should be a year where you have to wait for your setups. You got to be ready to fire when they're there, block out the noise, and then discipline enough to keep yourself in check when they're not. Otherwise, you know what happens? You hear it from the whole retail crowd. You ready for the word? Ad nauseum. You're going to hear it over and over and over. I'm getting chopped up. They're chopping me up. That's what they do. That's what they do in a corrective consolidation type phase like this. All right. I mean, anybody have any questions on what I've gone over here? Because honestly, and again, especially if you're members out there, I know there's a lot of members on this webinar because we do it every week. This is so much more important in this type of environment than the individual names and the flow you might be seeing in them. It's so much more important. Over here, when things line up like that, right? The flow goes from bearish to now looking bullish. Sentiment lines up, goes from bullish to extreme now to bearish extreme. I have so much more confidence in the sweeper activity there than the activity coming in at the top here, in isolated names when you don't have sentiment on your side in an environment like this. And that's what happens. And there's so, like, I give an example. You guys remember one name that caught a decent order. They actually closed last week. They closed them down for a loss. Data. We were talking about this. DATA. Okay.